From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 19th, 2016. In just a moment, we'll be taking a look at the USDJPY, the US dollar, versus the Japanese yen for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days. First off, starting here on the GBPUSD, Gray British Pound versus the US dollar. Of course, yesterday we saw a significant rally on polls about the Brexit as the market turned from the 144 level all the way back up here into the 146 level. And then it paused for a few hours as we approached the FOMC release yesterday at 2 p.m. Eastern U.S. time. Shortly after that, we saw the market start to become a little bullish for the U.S. dollar, or bearish here for the GBPUSD. Took a quick sell, a quick short here into the 46.05 level. The market went down about 30 pips and then turned right back around and came back up. Fortunately, we had applied the trade manager to the trade. When I saw 30 pips of profit, the trade manager took us to break even on the trade. It came back up, took us out, went back down, and then right back up again. So while it was a break-even trade, there was an opportunity to see about 30 or maybe even a little bit more pips as it came all the way back down to the bottom of our previous 4-hour candle. Next, moving over to the AUDUSD, the Australian versus the US dollar. We'll study this a little bit more in the live trade room today, but we see the previous uptrend, the current downtrend. We've been playing the current downtrend over the past few days. You can see the trade still going. I have a small amount of lots left on the trade, closed the majority of the profit already, but I have a small amount of lots on the trade sitting with 127 pips. Let's go ahead and zoom it in a couple of times here on the daily time frame. Our entry was all the way up here at the purple shaded area. We typically often will suggest selling on rallies into resistance after breaking through a support. So we had the support back here, broke through it, rallied to resistance underneath the 100 period moving average and the trend line, took a short there into the purple shaded area and have seen significant profit all the way down here towards the 71.90 level. I have closed again majority of the profit as it's touched down here into our next target. If it continues to go lower today, of course we'll look for it low 71s down here closer towards the 7100 level, the blue shaded area at the bottom of the chart. Otherwise, we want to protect as much profit as we can, because if we see any bounce off of the 72 or just in the upper 71s, we want to protect as much profit as we can now on the Australian dollar. Moving on over to the USDJPY, the US dollar versus the Japanese yen. Here on this currency pair, we have a very similar situation as we've had on several other currency pairs. We had a previous trend, which is the red trend line. It was a downtrend. But over the past couple of weeks, we've seen a little bit of a momentum shift. And we've seen that over on the US CAD as well, and the euro dollar on the way back down, where we saw a previous trend. And we've seen a little bit of momentum shift over the past 2 weeks. Euro dollar going down, US CAD going up, here on the US yen going up. So momentum shifts. So we want to begin looking for opportunities in the direction of that shift in momentum and potentially a change of the overall trend, which was a downtrend there under the red trend line. The little blue trend line shows us what's been happening over the past couple of weeks. Let's begin to zoom it in here a little bit, and we can see yesterday we looked in the live trade room of this period of congestion inside this blue box between the orange and the purple shaded area. Yesterday we talked about the possibilities of buying on any dips into the orange shaded area. Well, after the trade room, it never went back down there, never took a turn back down towards the orange shaded area. So we never really had an opportunity to jump into any buys at the bottom of our congestion zone. Now it's pushed right back up there through the purple shaded area. So, as we typically will talk about, we want to watch for dips into support or breaks of resistance for opportunities to go long on a currency pair. We can see historical resistance just over the past couple of days, about 6 or 7 days. We saw resistance into the purple zone 109.35 to 75. You go back in time, you can see some congestion resistance back here as well. So as long as it sits on top of 109.75, I think this becomes our next opportunity to go long here for the US yen, targeting the next resistance level. You can see the red circles on the left hand side touching the blue shaded area support. So that now becomes our next potential resistance target. That's 110.65 to 111. So if that's the resistance target, we know we're potentially breaking through the purple zone. This becomes our opportunity to go long. Our risk in this scenario will be just underneath the purple shaded area, I'm just going to put a little red line there. That's going to be our risk, because we know that if the market turns around, gets back under that purple zone 109.35, it's probably turning back lower again. So with the trend and momentum, the blue trend line, we're looking for buys on top of that level. The previous Fibonacci high of the long red candle down to the lowest low puts the 618 fib at 109.46. That's just at the bottom of our purple zone. So again, that gives us a clue that we've pushed through that 618. The next Fibonacci level that we'd come in contact with would be the 786, and that's right up here towards the blue shaded area. Area 886 is just above it. I think we could probably move that fib up to that high there, and it doesn't change it much. It just gives it a couple of more pips higher on that 786 and the 618 fib. But either way, blue zone, purple zone, main areas of focus here. Forex Black Book, by the way, has also turned green, giving us an upside bullish momentum. Let's take it on down to the 4-hour time frame. And again, now we can see with some clarity that the 4-hour time frame has clearly pushed through the purple zone. So again, buying on dips to the purple zone become the opportunity for the day today. A break underneath it is the risk on the trade. There's always risk in trading, but that's the risk. It pushes back underneath the purple zone 109.35. So stop loss underneath there, maybe 109.30, 109.25 might be an opportunity for a stop loss. 109.75 is where I have my pending trade. That's right there on top of the purple shade area. Actually, I think I have it at 109.70, just inside that purple zone. So my pending buy order, 109.70, stop loss down around 109.20, 25, 30, in just around where that red line is under the purple zone. We'll target 110.65 to 111, the blue shaded area, and we know what the risk is. A push through the purple shaded area sends it back lower for the US yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.